TVS Infrastructure Trust has listed today on the exchanges. We're now joined by the management, Mr. Ravi Subramaniam, who's the founder, Ravi Swaminathan, I beg your pardon, who's the founder and vice chairman of TVS ILP, as well as R. Dinesh, who's the chairman of TVS Supply Chain Solutions. Gentlemen, thanks so much for joining in, and congratulations to you on this particular listing as well. Let me first start off, first question on the business itself. I don't think there's any kind of direct peer comparison, to say the least, with your company. If you can just give us a little bit of, introduction about what the company is actually all about, and what was the key purpose of listing this particular entity.
TVS Industrial and Logistics Parks Limited is a 20-year-old logistics and warehousing company. We are amongst the first corporate developers of warehouse. Hitherto, this was in the unorganized sector. Till about 20 years back, most of the warehousing was either in the unorganized sector or in the government sector. We are one of the first participants in this sector from the corporate segment. Our journey in the last 20 years has been very positive, both from the market perspective as also from the regulatory perspective. At the time when we got into this business, we were looking at warehousing as a standalone business. Today, we look at it, in our company, we look at this business as an infrastructure solutions provider. That is, we have warehousing as one of our products. We also have a slew of other products which we offer to our customers. Most of the customers that we have in the company are sticky customers, in as much as they have been with us for in excess of 5 to 7 years. That's one. Two is, when we got into this business, we knew that logistics was a very important and integral part of the industry. At that point in time, the country was going through a positive economic upturn, and we identified TVS SCS as a credible partner to take this journey forward on the logistics.
Thank you, Mr. Swaminathan, for that. Just to understand the schematics between TVS ILP and TVS Supply Chain Solutions. Firstly, how is the entire management team expected to look like, taking into consideration it's going to be a different setup? And number two, how is a business going to be taken forward from here on? Are there any, because this is an investment trust, right?
Correct. Just to set the record straight, TVS Supply Chain Solution is an investor in TVS Industrial and Logistics Parks.
Okay.
It was not part of the business. Okay, that is one part of it. TVS Infrastructure Trust, which has been incorporated, and TVS Investment Manager, it's a 100% subsidiary of TVS Industrial and Logistics Parks. TVS Supply Chain supports the company as a true shareholder.
So from TVS Supply Chain side, we don't operate, or we don't have a direct involvement in the operations. Of course, we are also one of the people who use these warehouses, but we are a very small percentage user, if I can say that. So TVS ILP in its journey has had many corporate clients.
Okay.
And the supply chain was, I would call it, maybe the seed client when we started this way back in 2005.
Swaminathan, you mentioned that warehouses is not the only business that you have currently. If you can delve a little bit on that aspect as well, specifically, and also for warehouses, how many do you have currently? And you mentioned about occupancy is also very strong. So is that long-term contracts that you have with your clients?
Correct. Let me take the second part of your question first. We have 21 warehouses in 9 states spread across, it's pan-India. Right. What was your second question? Sorry.
No, I think from an occupancy perspective.
Yeah, from an occupancy perspective, we have in the last 5 years we have almost 100% occupancy, which is in this industry is a unique feature.
And the total square feet?
We have a total platform of 20 million square feet in TVS Industrial Logistics Park. Out of this, we are transferring to the infrastructure trust around 11 million square feet of warehouses. It is not only warehouses, these are all logistics parks. Let me just differentiate between the two. Warehouse is a construction where you have, let's say, 50,000 square feet and only storage is done there. Whereas in a logistics park, there are more than storage. That is, it's almost semi-manufacturing in that sense of the term. So there are activities other than storage which we do. Warehouse management is one of them. There's a lot of value-added services that the customer requires, which we offer them.
Your EBITDA margin profile is very, very strong, over 80%. Is that because you're currently also offering these value-added services, or is that something that will come in the future?
It is a mix of both. The fact that we have such a high occupancy helps in improving the EBITDA margins. That is one part. Two is because we have a slew of products other than only rental income which comes into our balance sheet. That also goes towards helping in absolute numbers the EBITDA margins as also percentage of EBITDA margin.
You had in terms of profits also in terms of the 80% EBITDA margins, profits compared to the revenue is quite low as a percentage. Is that also because of the high debt of the company? Because the finance cost has actually risen steadily over the last 3 to 4 years. So from roughly about 1,300 crores that you are raising, are you also pairing off a lot of debt from the fresh issue component?
Yes. The purpose of having an InvIT established, an infrastructure trust established, and having investors in that infrastructure trust is to pair off the debt. In fact, after this issue, I would safely say that TVS Industrial and Logistics Parks would be a zero debt company.
That means automatically the depreciation, the finance cost will go down, and that will lead to increased profitability as well. If you talk about operations, the revenues have been on a downward trend to an extent. Your EBITDA and the margins also have been in that range of 80% to 87%. And in terms of profitability, you've gone down to around 15, 16 odd crores. What is that growth that you're expecting in terms of FY26 and 3 years from here on, taking into consideration the plans that you have?
Let me put this in context. The reason why there was lower EBITDA percentage over the last 3 years is 3 years back, we were a 7 million square feet company. Today, we are a 11 million square feet company. 3 years back, we had a platform of 12 million square feet. Today, we have a platform of 20 million square feet. So there is increased output, shall we say, which is not reflected in the revenue, because in this industry, it takes between 9 months to 12 months to set up a logistics park and to earn revenue from there. So the mismatch between setting up a logistics park and earning revenue is what is the difference you're seeing in the EBITDA margins.
And very lastly, in terms of expansion plans, how are you looking at expanding from here on? Because you have a lot of global investors like Blackstone, ESR, GIC, who are increasing warehousing investments as well. So there is competition which is building up. What is your strategy, 3 years from now? Where do you see the company? How much capex will you need for that? And will that be through internal accruals, the IPO money that is raised? How are the dynamics expected to work out?
There are two aspects to this question that you've asked. One is we don't consider financial institutions to be our competitors. For those names that you just mentioned, this is another asset class for them. In this business, we are amongst the one and probably very few corporate developers in the trade. That's one. Two is, with regard to our capital requirement, if you see 5 years back, we teamed up with British International Investment, that is BII, originally CDC. As also 2 years back, we got in XR Group as a strategic partner. All these global investors were introduced into the company only from a long-term capital requirement point of view. That is one. Two, coming down to the InvIT, we had various options of choosing anchor investors. We could have had any of these pension funds or these private equity funds as our anchor investor. But we chose to go in with a developmental financial institution like IFC, the World Bank Group, and L&T as a strategic investor, only because they have deep pockets and they will satisfy our hunger for growth.
One last question. In terms of growth over the next couple of years, because I can see your revenue trajectory has been between 150 to 180 crores over the last 3 years from FY23 onwards. So in the medium term, at least in the short term, FY26, what is the growth aspiration for you in terms of revenue only? And secondly, in terms of competition, how do you see in terms of increasing your business for value-added services? Is it that the companies are existently doing these functions on their own and they outsource this to you? Is that the kind of business model that could help you grow much faster since these functions are getting outsourced to a specialist like you in this field?
Correct. The basic idea was in this last 20 years, what we've done is in the first 5 to 7 years was our knowledge gaining phase of our business. We gained knowledge of the industry. In the next phase was our capability building phase, in which we created capabilities or we bought capabilities to ensure that we are an infrastructure solution provider, not just a warehousing company providing warehouses on rental basis. All these efforts that we've put in the last 15 years have started bearing fruit now in the last 3 to 4 years, where you're seeing our percentage of rental revenue to value-added service revenue is progressively going up. Over the next 3 years, we expect the value-added services to be a significant portion of our total income. To answer your question in terms of are the customers using our services for that? Yes, we are a very customer-centric business company. So we provide all the services which a customer requires. We are not thrusting any product on them. One
Understood.
of the latest products that we are offering the customer is on the sustainability part. We have got rooftop electricity.
So I think a lot of value-added products that come in as well. But thank you so much, Mr. Swaminathan, Mr. Dinesh, for joining us on the show and sharing the views. So that's a new listing that we have been watching out for as well.